Welcome back. The Habtoor Leighton Group has been awarded a healthcare project worth $314.6 million in Saudi Arabia. The Gulf Kingdom's Ministry of Health has awarded the project for King Fahd Medical City, which will be delivered in a joint venture with Al Latifiyah Trading and Contracting. The medical city, which involves the construction of new medical centres on the current King Fahd Medical City campus to integrate with existing medical facilities, is located in the centre of Riyadh. Works will commence later this year, with the project to be delivered in stages over the next 3 years.
The project is due to start immediately and will run for 3 years to completion. Its value is around $316 million US, and quite frankly, it fits very neatly in with our strategy for the whole Middle East and particularly the Saudi market. And we see quite a lot of opportunities in this infrastructure area, particularly the economic and social infrastructure area for us in the longer term. Well, we understand the Ministry of Health in Saudi are particularly keen to see more medical facilities constructed in the kingdom for the residents of the kingdom. And we're keen to follow the ministry's lead on that and obviously be very much part of their specialist contractor delivering these specialist type projects. HLG is looking into areas outside the UAE very firmly, very strongly at the moment. There are other medical projects that are targeted in Saudi and also similarly in Kuwait. And currently we're positioning ourselves to work with some local partners in each of those areas to ensure that we pick up the increasing market share in both Kuwait and also in Saudi.
HEADRAIL, the developer of an $11 billion railway network in the UAE, revealed today that it has appointed His Excellency Dr. Nasser Al-Mansouri as the company's new CEO. Mansouri, who replaces Richard Boca, has served as a board member on the company since 2009. He will continue in his board role in addition to assuming his new position immediately, according to a company statement. HEADRAIL's 40 billion dirham 1,200-kilometre route network will connect urban and remote communities throughout the country. The network will facilitate trade, open up communication channels and foster economic development. The network will also form a vital part of the GCC railway network, linking the UAE to Saudi Arabia via Guafat in the west and Oman via Al Ain in the east. Emirates Central Cooling Systems Corporation Empower announced that it has recently cleared a half-yearly loan instalment of 83 million dirham, part of the syndicated loan facility from a consortium of banks, with Emirates NBD being the facility agent. The company said the clearing of the instalment is part of its commitment to settle its loan on schedule. The loan was used to build Empower's plants and networks in Dubai International Financial Centre, Business Bay, Mirdif Tcom and Al Quoz projects. Let's now look at the stock indices across the GCC. In other news, Spanish bond yields have climbed past 6% for the first time since September 7, and euro markets are down on fears over whether Spain will be able to finance itself at reasonable levels without seeking a bailout. For many investors, only the timing of a request is uncertain, with most commentators pessimistic about whether Madrid will be able to reduce its massive public debt deficit or control its soaring debt levels. To find out more, we earlier spoke with Dauba-Pantanacce, senior economist at Standard Chartered Bank.
So first, let's remind the basic principle of the issue. In order for a country to be saved somehow or helped by the bailout fund in Europe, that country needs to formally apply for the bailout fund help. And that comes with a string of measures that includes economic and budgetary conditions. After the ECB announcement, there was a big relief on the market, and all peripheral bonds yields actually eased, and that included the Spanish ones. But after the market realized that Spain, in fact, did not ask and apply for that bailout fund. And so that meant that the ECB couldn't intervene and help Spanish bonds. Markets started to get stressed. But interestingly, yesterday, Spanish government issued some T-bills that came out at a very good result. First, the amount was bigger than they expected, and also the yields were lower than they hoped. So the government might take comfort for that, but I think that the real test will be for tomorrow, where the government will issue the biggest amount in 6 months in government bonds, up to $6 billion. And I think that this is going to be the real test for Spain and how the markets receive it. Eventually, we do think that Spain will have to formally require and apply for the bailout fund.